Housing prices in the wake of the pandemic have been on an elevator that does not have a button to go down. Buyers everywhere are struggling to either find a home that they like, or if they have found something of interest, deciding how much to offer for the home to stand out as a winning bid amongst all the competition. But more often, buyers like you and I end up losing on the bid as someone else outbids us time and again, forcing us to start looking for a different home altogether. In this video, we will be talking about how much more than the asking price you should offer, not to be competitive or win the bid on a property you like, but to make sure that even after offering a higher than asking price, the cost of that property is financially sustainable for you, and we are starting right now. What's going on, guys? My name is Sharil, and you're watching Honest Millennial, where we talk about all things money that they don't teach you in school. So if you haven't already, please consider subscribing and gently hitting the like button to express that you like the idea of making money, saving money, and investing money. At this point, we all know how overheated the housing market is, with housing prices having jumped up significantly over the past year, fueled by low inventory, high demand, and a lot of people willing to pay way over than the asking price for the home to just win their bid in a highly competitive market. It can be nerve-wracking for a lot of first-time home buyers with no experience about the process of buying home, let alone not having a very good understanding of what they should be paying for a home they like or what their mortgage payment is going to be. As such, it is crucial to understand where you stand in this ruthless housing market and what options you have to understand how much you should be paying as a first-time home buyer, and if paying even $1,000 over the asking price is worth the investment or not. Let's first talk about how much you should be paying over the asking price and what should be a good cutoff point in case the buying offers start to get more heated. The first step in determining how much you should pay for a home is understanding your specific market. The US is a large country with different levels of market spread throughout various states, and home prices can vary widely in the country depending on their location, demographic, availability of homes in the local area, and just the economy in general. For example, the price of a typical home in California or New York is roughly $400,000 to $500,000 more than the price of the same home in the states like Michigan and West Virginia. Not only that, but the amount of money you pay as a homeowner in each of these states varies widely and is controlled by the jurisdiction your home is a part of. Given this information, it is essential to understand the specific market that you are planning to purchase a home in before deciding if at all you should be offering more than the asking price. Once you figure out what market you are planning to have your home address in, it is important to understand the demographic of that area. The most crucial information from the demographic data will be the median household income. This is an important parameter to understand as this will determine which home prices will be more competitive and which won't. It may be that for the specific market you're looking at, a $300,000 home may receive immense competition from similar buyers and at the moment may require you to shell 50 grand over the asking price without providing for any additional value from the purchase. But going for a more expensive home, say a $400,000 home, may be less challenging in terms of higher bids, and even though it's 100 grand more expensive than the $300,000 home, chances are that it will bring more value to you as a buyer, and there is a higher likelihood that it will retain its price better compared to the $300,000 home from before. Of course, it goes without saying that you make sure to understand your income levels and your monthly budget to really figure out what your comfort level is for buying a new home. Obviously, you do not want to end up in a situation where all you can really afford to pay every month is $1,500, but you are buying a home that puts your mortgage payment as $1,000 more than what you can afford. But if you absolutely have no choice and want that $300,000 property because either you really love it or that is what you can afford, then here is how much you can pay above the asking price on it if you wish to. Experts claim that in the situation of a property getting multiple offers, your offer needs to be at least 1 to 3% over the asking price of the home. Meaning, for the $300,000 home, your offer needs to be between $300 and $3,000 to $300 and roughly $10,000. I agree that the housing market is really competitive at the moment, and the extra 10 grand on a $300,000 home is probably not going to win you the offer, and chances are that you may have to shell out as much as 50 grand above the asking price of the home. You can do these if you have money available, but there are inherent risks associated with putting anything beyond 1 to 3% more than the list price of the home. The number one risk with offering more money than the list price of the home is from the property appraisal coming at a lower value. Generally, after you submit an offer, the sellers will sit down with their agent and go through all the offers they received on their home. After that, they pick the best offer they like. chances are that your offer will get picked because you offered $50,000 more than the list price. Congratulations, that's one obstacle out of the way. Somewhere along the course between getting picked and signing your mortgage, the lending company will appraise the value of the home to make sure they're only lending you what the property is really worth minus your down payment. The big risk with offering more than the asking is that if the appraisal comes out to be lower than the price you offered, you now have to shell out all of that extra money upfront out of your own pocket. For example, for a $300,000 home, say you decide to offer 50 grand higher than the asking price. The bank's appraisal comes out at $280,000, basically meaning that the property is not worth what you're willing to pay for it. You are now left with having to pay the remaining $70,000, including your down payment, out of your own pocket upfront. Most home buyers don't have this kind of money to shell out, and even if you do, the extra 70 grand is better suited partly in an investment account where it can make you around 7% on average per year, and partly in an emergency expense account to fall back on in case something out of the ordinary happens with your life. The second risk with offering above the list price is from the economy going into recession. Over the past year, home prices have seen a tremendous amount of growth, similar to what was seen before the 2008 financial crash. Home prices have gone up significantly, and it seems like there is no end to the rise in prices in the near future. But when interest rates start rising again in 2022 and the mortgage forbearance expires, the demand for homes on the market is expected to slow down owing to higher costs of borrowing money or the incapability to pay a mortgage at all on a monthly basis. This may start creating a downward pressure on the prices of homes, and a lot of homes that have seen an exponential growth in value over the past year may start coming down in value. How much they will come down in value is really anybody's guess. The bad part for you who just paid $350,000 for a home that was on the market for $300,000 is that when prices start coming down, you start to acquire more and more negative equity in the home and start to lose your footing. For example, let's just say that the home appraised exactly at $300,000, unlike the $350,000 you offered for it, which means that you paid $50,000 out of your own pocket to get into the deal, plus a down payment. This means that a ton of cash that you had saved up for a rainy day is now spent just to get a new dream home. This already provided for a negative equity in the home worth $50,000. On top of this, if the market starts correcting itself and home prices drop by 5%, your $300,000 home will now be worth $285,000, providing for an additional negative equity of $15,000 on top of the existing $50,000. This can be both stressful or challenging depending on your financial situation. Recessionary periods are a lot of times coupled with job losses and massive layoffs. If you were to get laid off one day with a negative $65,000 equity on your home with no extra money left over in the bank, you pretty much would have no choice but to sell that property at a loss. Sorry to be a Debbie Downer here, but when it comes to your money, you really have to be smart in making these decisions and really have to take a look at things from the worst possible outcome standpoint. Buying a home is probably one of the biggest purchases you will make in your entire life, and I definitely would hate for a personal finance channel subscriber like you to be in the water with your purchase. So make sure to determine what your budget is before you go out to seek a new home. Make sure to do your own research on what area is more in demand and where it can be beneficial for you to purchase your next home. And most important of all, always make sure to have deal breakers defined when you are paying a hefty amount for the property. Negotiate as much as you can, but also don't be too annoying for the sellers if you really like the property. Just because the market is competitive doesn't mean that you need to be paying $50,000 over the list price to eventually end up having to pay another $50,000 to bring the property from being a fixer-upper to a more habitable condition. Again, when it comes to buying a property, there are no right answers for how much you should pay for the right home and what things you should consider before you finalize that home that you really like. So a little bit of research about what you're getting into goes a long way. That being said, go check out my BlockFi link below to get $10 worth of free Bitcoin. And while you're at it, also don't forget to check out my Webull link in the description to get 2 free stocks all the way up to $250 in value. Thanks so much for watching, guys. I really appreciate it. And as always, please don't forget to like this video below and subscribe to my channel for more personal finance videos. Also, if you are tired of just watching me in this small frame, please follow me on Instagram where I share spicy insights of my personal life and how I save money pretty much on a daily basis. Alright everyone, see you in my next video. Thanks again so much for tuning in this week.